While global markets face turbulence, Dubai continues to thrive, breaking records and drawing in investors from around the world. In fact, the Dubai real estate market saw a record-breaking 246 billion dirhams in sales in just the first half of 2025. Hello everyone, I am Saurav Pandey, and having lived in Dubai for over 4 years, I am not just a real estate consultant. I consider myself a brand ambassador of Dubai, an advisor with over a decade's experience in financial analysis and planning. In today's video, I intend to simply analyze the performance of the real estate market in the first half of 2025 and structure it so it's easy for you to understand. I will also share straight talk on the potential risk here as your industry expert. We will look at what the second half of the year looks like, and for those of you who are interested to know my opinion on where to invest, I will share my recommendations as well. So let's get Dubai's first quarter real estate performance started. In the first half of this year 2025, Dubai real estate did a break recording 85,669 transactions worth 246 billion dirhams in value, a plus 27% versus the same period a year ago. Dubai has been growing in double digits for over 4 consecutive years. Now, of this 246 billion dirhams in value in the first half of this year, apartments grew at plus 10%, townhouses at plus 53%, and villas at plus 37%. Even when you look at the volume growth, we see the same trend where townhouses are growing fastest, followed by villas and then apartments. Let's go one step deeper here by looking into the split of sales between apartments, townhouses, and villas. In the first half, 30% of the sales value came from villas, 17% from townhouses, and 53% from apartments. If you now look at off-plan versus resale, half-yearly first quarter of 2024 saw a 50-50 split, meaning 50% of the sales value came from resale and 50% from off-plan. In 2025, the split is 54-46. So far, 54% of the sales were from resale and 46% from off-plan. Zooming into villas, which make up 30% of sales value, in first quarter, 94% of villa sales were in the ready segment versus only 6% in off-plan. Two main reasons. First, developing villa communities isn't everyone's cup of tea. Only government developers can deliver high-quality villa communities. And two, high net worth buyers prefer ready villas as they want to live in them today, not 4 years from now. In the townhouses segment, 62% of townhouses sales in the first half of 2025 came from ready stock and 38% from off-plan. For apartments, which comprised 53% of the market, this was reversed. 29% of sales were in the ready segment and 71% in off-plan. What does this tell you? Given global interest in Dubai from investors and an influx of end users, attractive price points, and developer-friendly payment plans, the market continues to thrive in this segment. We have covered the split between off-plan and resale apartments, townhouses, and villas. Another important angle is the growth of homes sold by price segment. The fastest growing was the plus 10 million dirham segment, which grew at an index of 151 versus a year ago. And key to note, this segment has grown 20x since 2020. In H1 of 2025, only 20% of transactions in this price bracket were from off-plan, while 80% were in the secondary resale market. Next, the 3 to 5 million dirham segment grew at an index of 128 versus in the same period last year. It only accounted for 15% of total transactions but shows significant growth potential, indicating that middle to upper middle class buyers are entering the high-end market without stepping into ultra luxury. The largest segment is the 1 to 3 million dirham range. Comprising 50% of transaction in the first half, it grew at an index of 116 versus a year ago. With half of all transactions in this segment, it remains the most popular and safe investment tier. Here, off-plan contribution 67% of transaction, while resale accounted for 33%. Now, how is this impacting price per square foot? H1 2025 saw a price of 1,780 dirhams per square foot versus 1,717 dirhams per square foot in H1 of 2024, a growth of 4%. This relatively modest increase suggests the market is stabilizing after sharp rises in previous years, aligning with broader market maturity. It also indicates that buyers are still willing to pay a premium for well-located, high-quality properties. Some of the increase in price per square foot is also attributed to rising cost of construction, materials and labor that developers are passing on. At about USD 485 per square feet in H1, Dubai is still affordable compared to other global cities. Risk to consider. While Dubai offers significant opportunities, it's essential to understand potential headwinds. Geopolitical volatility. Though relatively insulated, conflicts or sanctions in neighboring countries can affect investors' sentiments. The recent conflict between Iran and Israel made some new investors cautious. But ultra-premium projects like Jumeirah Emirates Tower sold out quickly regardless. Credit rating concerns. Recent Fitch coverage pointed to a possible 15% correction in H2, though expert views vary. Interest rates impact. Dubai's market is sensitive to rate changes. As of June 2025, 80% of transactions are cash-based and 20% mortgage-backed, mostly in off-plan projects, meaning rates are a factor, but not a deal breaker. Rental yields. Combined long-term yields in H1 were 6.93% with apartments at 7.33% and villas townhouses at about 5.02%. New rental contracts are averaging 7.35%. Apartment ROI is higher because a costlier onboarding for villas reduce yield percentage. B. Villa tenants are typically long-term families with fewer rent adjustments. And C. Apartments are located in high-demand urban areas like downtown, Marina, Business Bay and JVC. In H1, 90% of rental contracts were for apartments, 6% for villas and 4% for townhouses. Short-term rental yields are 1-2% higher than long-term rental yields, making Dubai among the top markets globally. While transactions numbers stayed in line with a year ago, the value of short-term rentals rose 9% in headquarters 1. Popularly, growth and tourism impact. Dubai's population reached approximately 3.95 million by June of 2025, adding 110,000 residents in 6 months and 230,000 since 2024, a 6.2% increase. The city's daytime population is around 5.21 million, expected to hit 8 million by 2040. This sustained growth is fueled by visa reforms, making residency easier for investors and professionals. Tourism is also rising. Dubai welcomed 7.15 million visitors in the first 4 months of 2025, a minimum 7% increase over 2024, on track for 23 million visitors in 2025. Aviation number hit 48.6 million passengers in H1, up 6.4% compared to last year, targeting 96 million for the full year. Hotel occupancy remains strong at 80% despite the summer, driven by a mix of leisure and meet events year-round. Economic context. UAE GDP grew 4% in 2024 to USD 484 billion and is expected to grow 5.1% in 2025, non-oil sector driven, per UAE Economy Minister. The World Bank refines this to 4.6%. Foreign trade is on pace to hit AED 4 trillion by 2027. 4 years earlier, this robust economic environment underpins continued demand for real estate, attracting both local and international investors. The Dubai government approved a 3-year budget cycle 2025 till 2027, the largest in its history at AED 272 billion, USD 74 billion in 2025. Planned expenditure is AED 86.26 billion, with 46% allocated to infrastructure, 30% to social development, health, education, research, housing, 18% to safety and justice, and 6% to government excellence. In the 2024 to 2025 academic year, private school enrollment rose 6%. Dubai aims to open 100 new schools by 2033. 10 opened this year and 6 are confirmed for next year. 4 major universities also opened campuses in 2025. Housing supply in H1 of 2025, 17,552. Residential units were delivered about 60% of expected completion, with the remaining 40% overdue projection suggest 72,000 units will be delivered in 2025 and 104,000 in 2026, well above historical average of 35,000 per year. If demand doesn't keep pace, oversupply could cause pricing pressure, yield compression, and slower absorption, making population growth and tourism key to maintaining balance. Top performing locations by transaction count: overall, JBC, Jumeirah Village Circle, Business Bay, Dubai Hills Estate, which are mostly driven by apartments. Villas: Palm Jebel Ali, Dubai Hills Estate, Emirates Living. Now, what are the key projects launches in H1 of 2025? Azora Bay Ultra Luxury Residence in JRA Shoreline. JR Acres Final Phase 3 to 7 bedroom villas. Bay Grove Residences 1 to 3 bedroom apartments in Dubai Islands. Atlas Tower D3 plus Jumeirah Emirates Towers Residences, June launch in DIFC by Miras. Now, Grand Polo Club and Resort is standalone 3 to 5 bedroom independent villas, which is located very close to the Al Maktoum International Airport. Palace Austera at Oasis, branded villas. Rivera at the Valley, semi-detached villas. Now, Vassal Group Phase 2 of Jumeirah Golf Estate, villas and townhouses. Then, Damak Chelsea Residences, which are the apartments in Maritime City. Then you have the next, which is Beyond Group, premium residential waterfront in Dubai Maritime City. Projects to watch in next half of 2025. Palm Jebel Ali and Oasis area villa launches, example, Grand Polo Resort and Club, Jumeirah Golf Estate, Nadal Shiba Gardens, Expo City Community. With such a strong start to 2025, Dubai's real estate market is poised for sustained and thoughtful growth. Certain areas and segments are expected to remain top performers. If you are considering investing or need tailored advice, I am happy to help. Thanks for watching. I am Saurav Pandey signing off.